How are you? You good? Are you good? You look tired already. Aren't you tired? You're not tired, eh? You should be vibrant. You're young and energetic, so you should be vibrant, ready to be rich. Yeah. So my name is Leonard Kameta. I work with Dar es Salaam Stock Exchange. I hope you've heard about it, maybe some of you. So today I'll be trying to talk about what Dar es Salaam Stock Exchange is, what do we do, and how it helps you as a person to enhance your life, yeah, in terms of financial wise. So I'd also like to know, who am I talking to? We start with the lady in the team. What's your good name, madam? Margaret. Macrin. Okay, you're in class what? Class 6. Good. Yes, sir. You?
My name is Kameta. And I'm studying from 5.
Okay, from? From 5. Nice. You look young for from 5, but it's good. Sir?
My name is Aksan, and I study in Form 4.
Nice.
My name is Leonard, and I study in Form 2. My name is Chad, and I study in Form 3. Muhammad Adam, also in Form 4.
Nice. Now we've got some other ladies in the house again. Madam, what's your good name? And which class are you? Stand 5. 5. Too young to be stand 5. Okay, guys, so we are, yeah, come on.
Sorry, I had a confusion. I'm in Form 3.
Form 3. Well, how are you forgetting your class?
No, I know it in grade 9 and stuff.
Okay. Grades. You go in a system of grades, yeah? Good. So now we have 2 totally different groups. Okay? We have the youngest ones and the medium ones. So we'll try to also complement. They can also be in the same page, yeah? I'll try to make it simple as it is. It might seem a bit simpler to you more, but for the sake of the girls, yeah? But we'll get there. So I know you've been learning about being an entrepreneur. You've been taught about being an entrepreneur, yeah? So anyone tell me, what have you been learning so far? Anyone? In the line of entrepreneurship, what have you been learning? Yes, sir.
To set up a business.
How to set up a business?
Documents required to set up a business.
Documents required to set up a business. Yes. Sorry? Digital marketing. Superb. Yes.
Affiliate marketing.
Nice. Girls, don't sleep. You forgot it here? About what? Oh, you're closing your mouth, so I cannot hear you properly. Be free. Okay. Sawa. What else have you been studying on during the time of entrepreneurship project? What else, gents? So yeah, before you start anything, first of all, you're supposed to have something in your mind, right? You're supposed to have something in your mind. What do you aspire to be when you grow up? What do you want to be when you grow up? A singer. Yeah, even if it's a singer, but you have to be a business person, yeah? And you? A singer too. Sir?
Entrepreneur and engineer.
Nice.
I wanted to be a lawyer, but I'm not sure now.
You're not sure yet. It's a good answer. Because things change. As time goes, your mind changes, yeah?
Stockbroker.
Stockbroker. Smart, yeah? You don't know. Fair enough, but you should know. You know, as time goes, you should know. Sir? Entrepreneur. So, there's so many things someone can do in life. So many things. One can be a doctor, one can be a lawyer, one can be a business person, one can be a singer. You know, when you do something you love, and then you'll do it right. Okay? If you do something when you're forced, because my brother is a doctor, my father is a doctor, my mom is a lawyer, so I have to be either of it. And then it's going to give you confusion because you have to work so hard. Why? Because your mind is not set into that line. So you have to work so hard for you to be in the right spot. So now, before you start everything, first you should have a dream. A dream turns into a goal. Okay? You should have a dream. When you're growing up, I remember when I was growing up, I said I wanted to be a doctor. Neither of my parents are doctors anyways. One is an engineer, one is an accountant. And I wanted to be a doctor. As time went, I wanted to be a pilot. I think by the time I was growing, every boy wanted to be a doctor or a pilot. Things changed again. Okay? By the time I go to high school, things even changed worse. Go to university, and now I'm here doing something which I never even studied. Okay? I did business, yes, right? But stocks, no. It's just something I got inspired with when I was now catching up. I've started working and everything. So, to all of you, you should have a dream first. And when you have a dream first, and then you live by it, you set goals to achieve that dream. You say the how, why, when, how do I achieve it, where do I achieve it, who will help me assist to achieve that dream. Now the dream becomes a goal. Okay? A difference with the dream and the goal, a dream doesn't have time frame. Okay? A dream does not have a time frame. You sleep, you dream, you wake up, it's gone. But something must have been captured in your dream. Said, okay, maybe if I be like my uncle is a business person, my dad is a lawyer, whoever it is, but I adore my uncle. I want to be a business person. Okay? Now, when you're taking that dream into a goal will tell you, when do you want to be a doctor? How do you want to be a doctor? By what will assist you to get there, to be a doctor? So there are so many hows, whys, when, who. All those will help you achieve your dream that change into a goal. Now you have a goal. Goals are set up differently. Okay? Goals, it's like a target. I want to aim to that kibanda there. For me to aim to that kibanda precisely, okay, for those who are doing hunting and everything, you'll have to see how the wind is blowing. Okay, how the wind is blowing, the distance, how the target is moving. Okay, so even your goal changes. So when it changes, that's how you want to aim to that particular target. Sawa? So as time goes, you lock yourself into that goal. Now, to achieve a goal, we say there is a how, why, when, what. Okay, that's a goal. But now goals can be set differently. Goals can be set differently. Goals are usually categorized into two. Short-term goals . Okay? We tell them to sell part of their businesses. To sell part of their businesses. How? By creating things called shares. You have an orange. It's a whole orange. Okay?
Cut it into pieces so they're all equal shares.
Okay? So you have the whole orange. But now, you bought the orange for 200 shillings. And the orange is there. It's there. Worth 200 shillings. But maybe you need more. You need 300 more shillings to put into that orange to make it even better. So what do? You cut the orange into equal parts. Okay? And maybe you say, okay, from the 5 parts of the orange that I've cut down, I'll sell 3 of them. I'll remain with 2 of them. Okay? Each part has got equal value. That's a share. Each part has got equal value. So if I sell the other parts, the 3 parts, I'll get more money. So let's say it's the 5 shares, each one worth 100 shilling. So it means the whole business is worth 500 shillings. But now that was when you're starting it. You had the 500 shillings, you used it to where the business is. But now you've cut down to more other parts, which the orange is 500 shillings. Now each part is, we say, 100 shilling. If you invite people to buy the other 3 parts, so you have in mind, in the back mind, you'll have the 500 picture plus the 300. Are we clear? Are we clear? 1 orange is worth 500 shillings. That's your business. You bought that business, or you started that business with a 500 shilling. Down the line, the business needs to grow, but you need more money. You can go to a bank to get a loan. You can go to a family member, ask for a loan. Or you can come to Dar es Salaam Stock Exchange and we will advise you to sell part of your business, not the whole of it, part of your business. Now if you're cutting that business into pieces, we call those pieces as shares. But these shares will have equal value. So if your business was worth 500 and you're cutting them into 5 pieces, each of them is worth what? 100. Okay? Remember, you started your business with 500. You use already the 500. But your business value is 500. Now today, after 2-3 years of running the business with the 500, you want to expand it. But how do you expand it? You invite some people to buy part of your business. The other 3 shares, the other 3 parts of the orange, which worth 100, 100, 100. If you sell them to the other partners as shares, they buy them, so you get 300 more to your business. It was worth 500, you sell again that, you resell it, you get the 300, you add it to them, and then you have a business worth 800. It's already expanded.
So as I said before, it's basically like Shark Tank, where you ask for money in return of parts of your company. So parts of your company are known as equity. The money you're asking for is how you're going to improve your company or expand it by like setting up more branches of something or.
So you watched that episode, yeah? Good. Very good. You tell your friends to watch it too.
Is Dar Stock Exchange a public corporation or is it privately owned?
It's public. Yeah. Okay. So you come with your yeah.
I'm just really understanding how do you break down a business. For example, you start a hardware shop. Okay, let's say you want to expand that. How do you cut that down? How do you cut it?
So now all businesses have something called a memorandum of understanding. A memorandum of understanding is what tells about your business. Okay, who owns the business? What is the value of your business? Into that, it also talks about shares. What is the value of the business in terms of shares? So let's say your dad has started a business. Maybe your dad and your uncle started a business. Your dad had money, but he was not much of an entrepreneur. And your uncle started business. So your dad says, okay, we start a business, you put your skills, I put my money. But because I put my money, I'll have the bigger part of the business. And I'll give you the small business. So in that memorandum of understanding, it's an agreement that tells you your dad has 80% of the business and your uncle has 20% of the business. Holistically, it adds up to 100% shares. So your dad owns 80% of the shares, your uncle owns 20%. So if you go to all businesses that are registered,
that's one of the documents needed before starting.
Yes, I think you've learned about that.
Yeah, memorandum.
So before you register a business, there has to be a memorandum of understanding. an agreement between the people who own the business. If it's only you, yeah, you are an agreement to yourself, or the people collectively who are owning that business, partners, so that whoever reads about your business understands it. Like, okay, Mr. Ahmed and Lillian owns this business, but Ahmed owns 5,000 shares worth 80%. Lillian owns 20%, maybe worth 500 shillings, something like that. Okay? That's the beginning of the business itself. So now you come to the stock market exchange, you want to raise money for your business, we'll tell you to break it down into shares, and then you sell the shares. When you sell the shares, when those partners buy the shares, you will have more money to expand your business. Now remember, we said we're serving two people. People looking for capital to grow their business, and people who have money, who wants to grow their money through investment by buying those shares. Sawa? Are we together? So, this guy has sold shares and he's going to expand the businesses. Now, he has more other people owning that business as shareholders. Those shareholders, it can happen not necessarily from the Dar es Salaam Stock Exchange. You can do it at a family level or friendship level. We can agree on the side, put an agreement here. But if you want to have it very legit, if you want to have it very open, then you have to come to the stock market to do that sale. Okay? So one has sold the company shares, and there's another one who's bought the company shares. Now you see, selling and buying. We're talking about selling and buying of shares. One wants money to grow the business, sells the shares. One has money, he wants to invest to grow more money, buys the shares. So already I've spoken about the two people we serve at the Dar es Salaam Stock Exchange.
Can a private company also go to the Dar Stock Exchange because their stocks are private, not in the public?
Yeah. So now you can have two people running the business as a private company. Okay? But now the company or the customers out there are growing very fast. Your production of your goods or service are minimal. But people are wanting it because you're producing very good products. People are wanting it. And you see that eager that people are wanting it. How do you do it? You come to a stock market. You again sell part of your business. You agree between the two. Let's sell maybe 35% of the business. If you're selling it from the stock market, and then your company turns from private to public, because it's now people, anybody can buy it. So your company turns from a public ownership from private ownership to a public ownership. Public is like everybody is free to buy, and then you get more money. Now again, once this guy has got the money, the business is moving smoothly. There's another person who has the shares, expecting to get more money out of the shares. So, you own the shares, but you expect to have returns. I've said not profit. You can say profit, but if you're an entrepreneur, you say returns or interest. So, it's a funny thing because business is a matter of choice. If you go into a religious wise, you talk of interest and then it becomes haram, yeah? It becomes haram. But it's a matter of choice. You want to stick to religious or you want to be rich. Most rich people, as much as they're religious, but they deal with these interests. True or false? If your father has a business today, do you want to tell me Baresa, for instance, don't you think he's getting loans? Is he not getting loans for his business? He's getting loans. But what else does he pay? At the end of the day, he pays interest. So it's a matter of choice. That's why I said as a caution. You want to be an entrepreneur, it's a matter of choice. But the good thing is nowadays, most of these financial institutions, like the banks, stock market, and so you name it, they have these Islamic products where interest is not involved. You get a loan, they will not give you money as money, but they'll go buy whatever machinery you want. You go buy for your trucks, but when you pay more. But again, that more is just a matter of a thinking. Again, it's interest. Whatever you pay more is interest or profit. So it's being an entrepreneur is a matter of choice how you want to operate your business. So when we said one has sold the shares, gotten the money, has gone to expand the business. The other one has got the shares, but he expects to get interest out of that money, out of those shares he bought. There are two ways he can get interest out of those. Let me not use interest as much. He can get profit out of those shares he bought from the business. One is because if the business got the money from those shareholders, it has to make profit, because people are waiting for the interest or profit out of the investment. So they have to work so hard to meet their targets and beat their targets. Their target was getting 1 shilling, but they have to surpass that target. They have to get 2 shillings so that they can give back to the people who owns the shares. So, in business or in stocks, when you have the business and your shareholders, they're owning those shares, you have to work so hard. When you work so hard, you get profit. You have to share that profit with those other shareholders. That profit you're sharing is called a dividend. Dividend comes from divide. The interest, you divide it. Hence the dividend. So now you bought shares, you have the shares, the company is doing well, it's giving you profit in the way of dividends, and you're happy. But now again, those shares, we said you bought it maybe for 100 shilling a share. Those shares might change their value. Those shares, the 100 shilling share you bought, might change its value. How? If the company you bought the share is doing very well, it means more people will want to invest. And if the shares were only 3, it means more people will want to snatch the shares out of you. If they wanted to snatch the shares out of you, what happens? There's something called demand and supply. My girls here is too big for them. What is demand? Do you know what demand is? That
Demand your money.
Demand your money. So when you say demand your money, it's like what?
You take out your.
You want. Demand is want. Okay, yeah. Okay, so it's something which is yours. So you demand, okay? So demand, when in entrepreneur you talk of demand. 1 second. When you are an entrepreneur you talk of demand. Is that wanting, the want of something? Okay? I have a business, I have a product I'm selling. There are so many people demanding my product. So it's like there's so many people wanting my product. And when something is limited, there are only 3 shares, it is limited, and there's so many people wanting it, automatically prices will go high. There's one bicycle here. It is sold for 200 shillings. And all of you guys want the bicycle. What will happen? It will be like bidding. You say I'll give you 250. The guy comes there, man, listen, you have a 250, what is 250? I'll give you 300. Okay? So the same is shares. When there's too much demand, people come to you, hey, my man, I want to buy the shares. How much? I bought it for 100. I'm not selling, not now. Listen, I'll give you 200, double the price. I'm thinking about it. Listen, I'll give you 300. 300. 300, now that's good, eh? So that's what happens in the stocks. The company will give you dividend or will give you profit out of whatever they've made. But also you can sell the shares on the side. You can sell the shares and make more money and say, okay, I don't want to be part of that company anymore. This 300 is very good for me. If I was expecting to get 300 in 4 years to come, but I'm getting it now, it's a good deal. I'm taking the 300, I'll go and start my own business. So that's how it happens on the shares. Are we clear?
It's your choice to sell it or not, right?
It's a choice. But now when it comes about good money, choices are limited, eh? Choices becomes limited. No?
I keep my first share.
You still keep it? You still keep it? Now, let me give you an example. This company is doing very well. People are wanting the shares. People are demanding the shares. And the value of the shares outside there is growing up. Your friends have sold the shares and gotten the 300. After some times, COVID-19 comes. Money in the circulation is not there. Your business is not good. You as a shareholder, you have the shares. You have the shares. COVID is there. People are not wanting it. And you have a problem you want to solve. You want to sell the share. Do you think you'll sell at 100 shilling again? You'll have to take the price down to attract people to buy your shares. So again, the behavior of a share is up and down, depending on the demand and supply. Demand, we say, is want. Supply is availability. The more tomatoes in the market available, the lower the prices will go, because everybody wants to sell them out before they go bad. So if the value of the tomato is 100 shilling, you take it down 60, 70, so you sell the stock out. When the price of when the tomato is few at the market, it even go 1 to 500 shillings. Okay? Because there's so many people scrambling to get them. You get my point, eh? So the behavior of a share changes according to demand and supply, but also how the company is doing at that particular time. So that is stocks, that is shares, that is people wanting money to grow their business, that is people having money, investing their money to grow their money, to get interest.
So it's like it's trading.
It is trading.
For share, yeah. So for share, you take money. It's the profit that's there. It's not exactly interest. Interest comes later.
Interest comes later.
But the process of buying a share and selling a share, it's only included.
Yeah. So one, your intention of buying a share for a company is you to grow, is investing. And we say when you're investing, if you remember initially when I was starting talking about goals and investment and finance and money, okay? We say if you're investing onto something, you expect to get profit out of it. So if you're investing on a share, you're expecting to get profit out of the shares. How? By getting dividends or dividends from the business after it makes profit, or by you selling the shares after you think the value of the share has grown significantly and it makes you happy for you to sell them. So those are two chains of shares. Sawa? We spoke of goals. I wish you guys could be writing. We spoke of goals. We spoke of finances. We spoke of investment. Okay? We spoke of how shares come to happen in a stock market. We said Dar es Salaam stock market serves two people wanting capital and people wanting to invest to grow their money. Sawa, eh? But again, we have something called bonds. Have you ever heard of bonds? Shares and bonds. Shares and bonds. A bond is like a long-term loan. A bond is like a long-term loan. Long-term, a long time. Sawa. Let's say today you want money, okay? You have a very costly phone, but you need cash. You don't necessarily want to sell your phone. Your friend has money, and then you think, how do I get his money? They said, okay, my man, listen, I'll give you my phone. It's worth 2 million shillings. I need 1 million. He gives you the money, 1 million. You give him the phone. You're not selling it. Why? You're going to return the money and get back your phone. By doing that, that is called putting something into bond. Bond is like a tie, bonding something. Okay? You're tying yourself to that person who's given you money because your phone, which is very expensive, is there. He's given you money, but less than what your phone is costing. For you to pay back, he has to give you a little money, whereby the phone you've given is more. Sawa? So bonding is like putting an agreement. I'm giving you my phone, give me the money, though it's gonna be less, it has to be less, so that it makes you hungry to return your money and get your phone back. So the same as, but now in a friendship way, you get your money with the equal value. Say he's given you 1 million, you've given him a phone worth 2 million, you give him back the 1 million, he'll give you back your phone. But if people are doing that in a business way, he'll give you the 1 million, he'll stay with your phone, but he'll tell you, okay, fine, we have to agree, when are you giving back the money? So there has to be time frame. You're not going to stay with my money for a year. There has to be an agreement, time frame. If it is very official, there has to be time frame. When are you giving back? After a month, fine. But now if it's a business, you're lending money out for business, when they're returning the 1 million, you would have agreed, maybe I want 10% on top. So you'll give 1 million with the 10% on top. That is profit to him. He's given 1 million, profit is 10%, let's say 100,000, so you're giving back 1,100,000. He's giving you back your phone, you're happy you've done what you've done, he's happy he's got interest out of his money. So the bond, logically, is like putting a security somewhere, you get money with an agreement of time and an interest rate somewhere. That's business-wise. Hence the bond. The same bond in the stock market is like a long-term loan. Usually, not individual, usually companies or the government uses the bond to get money. Okay? Like today, say NMB. NMB is a bank, a big bank, okay? NMB is a big bank. For NMB to get money, it either has to go to a bigger bank than itself to get a loan. Okay? But that loan will have bigger interest. Or the other option, NMB says, I don't want to sell my shares. I just want a long-term loan, a big amount, but I'll give a certain amount of interest back by you lending that money. So they come to a stock market. Hey guys, listen, I know you guys sell shares. You'd want maybe to sell part of my business, but I want to keep my 100% business. I'll just need a long-term loan from you in the form of a bond. So now, because we say these bonds are usually used by businesses or government, hence there are two names. Bonds that are being used by normal businesses are called corporate bonds. They're called corporate bonds. But bonds that are being used by government, they're called government bonds. Keep in mind, a bond is a long-term loan. That is an agreement of time frame and interest. So, the simple example I've given you, you have a phone, you want money, it gives you money. 1 month, you return it back with an interest of 10%, becomes 1.1 million. You get your phone back, and you're happy you've done your business. Okay? So those are two products. The stock market has two products. The stock market serves two types of people. Are we getting there? We started with you having a dream. For you to, those dreams we said they are goals. Okay? For you to make your dreams come true, you need money, finances, funds. For you to get money, you can either borrow from somewhere, family and friends, or you can get a loan somewhere. Okay? But for you to grow your money that you have, there are two ways you can grow your money. There are so many ways you can grow money. But most of it, the key one is by you investing. And now came a new word, investing, investment. You're investing. Why are you investing? To have more money out of whatever you've put there.
Can you explain what is interest? Brief word. What is
Invest.
interest?
Interest. Interest is that amount. It could be an amount or anything, but it could be a value that you're getting out of something that you have put somewhere expecting it to give you money or to give you profit. So interest, in the same other word, is called profit. But now, this interest you're talking about is in value. It has value. So interest is called, another word you can say it's profit, but it's a return or it's something that you expect out of putting your money somewhere.
So that's the same definition as profit. There is something different with profit.
Something different with profit, yes. Now, something different with profit is in terms of, it comes into religious belief, into terms of beliefs. But if you're talking business, there are differences. There's compound interest, there's simple interest or something. Those are too big for you now.
Yes, but I'm talking profit.
What were you thinking? What were you thinking maybe?
Because for profit is when you, let's say you buy a product from the industry, you buy it for 100 shillings. You go to the market and you put your profit at 100% profit and you put 200 shillings. That's profit.
Sour?
Interest, in my understanding,
Sour?
you lend someone some money and then you ask for more in return.
Of applications on the mobile phones and etc. and etc. Before the era of USSD code. USSD code is the one you dial *150#. That's USSD, yeah. An application is the one which you download and then quick. Before all that, it was called something called traditional market. Traditional market is you had to physically walk into a broker's office, you sit with them, they advise you, okay? You decide to make your decision, you decide to make your move, like which shares you want to invest. But now, with the advanced way, there's an application now. You download on your phones. It's called DSE Mobile Trading App. DSE mobile trading platform. Okay? Anyone can download it on your phone. It's found on both Android phones and iOS phones. So iPhones and Samsung and all those others. You can download that. But now for you to be able to buy shares and sell shares via this application, you have to register yourself. But for you to register yourself, unfortunately you have to be 18 years and above. Most financial services it's 18 years and above, yeah? If you're less than that, it means your parent or anybody who is older than you has to do it, has to open an account for you, yeah? Even you go to a bank today, if you're less than 17, your parent or your brother, your sister, whoever else will open an account for you. The same with us. But when you're 18 years, that can be changed. Because what happens is, that older person will use their ID, it's either a passport or a NIDA number, to open that account, a bank account or an investment account. We also have accounts that need to open. So you open a bank account or an investment account. Sawa, For you to open, you have to be more than 18 years. But now, for our case, if you want to open via an application, a brother of yours can use, or a parent can use their national ID. They'll put their details there, but somewhere on the application, they'll select a place, invest for a child. Okay? When they click that, it will give a space, some blocks, whereby they'll put your details, your name, full name, date of birth, maybe something, whatever they'll request there. After that, they'll open an account. It will be Ali's account, care of the name of a parent or a name of an elder. But now you get a PIN, you can start using it yourself. Okay? You can start using it yourself. So even now, your parent can open an account for you, and then you can start using yourself. You only need you only need some money in a mobile wallet, Tigo Pesa, M-Pesa, or maybe an account, bank account. You can also link your bank account with this. Okay? Sawa. 1 minute stretch, stand and stretch. That's too much medication I've given you. Stand up, just stretch a bit and then you sit. Stretch a bit. Regulations, the halal beliefs, you know? Instead of having profits, instead of having interest, they'll be having profits, maybe something like that. Okay, so you go to you go to New York. There's New York Stock Exchange. There's there's so many in the same place. So it doesn't matter. You can have as much as many. But for our sake, yeah, for our sake, okay, for our sake. By the way, the stock market here was started initially, the ideation was started to help the government to privatize businesses. The stock market in Tanzania was basically started initially to help privatization of government businesses to public businesses. When Nyerere was here, most government-owned businesses were flourishing. Okay? When Mwinyi came, he opened doors for businesses. People were able to go outside, import things. Hence, the companies here were dying. For the businesses to be helped out of that, when Mkapa came, he decided to privatize them, offload most of the shares to the public. So when the people bought the shares, the government had money to reopen them. But when that was happening, they had to build up the portfolio, not only based on the government-owned businesses. So now even everybody would open. So that was the ideation. Hence, we only have now, until today, we only have Dar es Salaam Stock Exchange. But it could also called Mwanza. There could be Mwanza, or maybe we could have two here, Dar es Salaam. Yet we could have Kinondoni Stock Exchange. It's just possible. But this one also, again, the market, Dar es Salaam Stock Exchange is only 24 years old, and we only have 28 companies that came to sell shares. How many SMEs? When I say about SMEs, it means small and medium enterprises or businesses. Those are called SMEs, yeah? How many are there, small and medium businesses in Tanzania, do you think? Roughly, just a guess. And most of these SMEs are family owned, yeah? So how many do you think these businesses are there? 70? 70,000, 70 million, 71? Just 70? I believe if I go to your family tree, okay, your uncle must be having a business, your dad maybe, your auntie. Your family only could have only 7, or maybe more than 7 businesses. In Tanzania, there are how many small and medium businesses?
7 million.
7 million. You're just there.
7.1, 7.2, 8.
By you saying 7 million, you're spot on. There are about between 7 and 7.5 million SMEs in the economy. If you go out here, all these are SMEs, yeah? But funny enough, it's only 28 that came to the stock market. I'll expect a question, why only 28 out of 7 million?
Why only 28 out of 7?
Good one. Yeah, it's a good question. Why? Because if you go to a bank to ask for a loan, it's very easy. 1 week, 2 days, you have a loan. But for you to get a loan from a bank, you need to submit a security, a collateral, yeah? Your house, your cars, your land, your farms. But if your business goes wrong, you lose them. They'll auction them. They'll sell them out for them to cover their money. So it's a bigger risk. But as much as it's a bigger risk for you to get loan, most business people don't really care about the risk. They want the money now. And they don't care what business you're doing. They want, all they care is the security, and you'll be able to pay them back. You don't able to pay them back, they'll sell your money, the property. The stock market, we don't get security for you to sell share. We want your business to be promising that in 5 years to come it will make profit. It will not die into 5 years come. Okay? We want that story. We want that story. Okay? But because it's now moving from private owned. Private owned, it means you can do your own stuff you want. Nobody will ask. But if it's going to public, it means whatever you're doing, everybody should know. And most people don't want everybody to know what they're doing in businesses. Hence the word called transparency. Transparency in the stock market is very key. So when they think of, it's easier to get money from the stock exchange because it's not a headache. But now opening up, TRA will be on my back, everybody will be on my back. People think, let me just go to the bank. That's the only challenge. Why we have a few. But you go to New York Stock Market Exchange, they have 40,000 companies raising money, selling shares there. Because them from the word go, they're legit, you know? They're straight, they're transparent. Pay taxes, whatever is happening is clear. They're not conny. They're conny businesses, but yeah, stuff like that. Guys, thank you.